When it comes to investing, there's no substitute for gold, and perhaps there never will be. So if you were thinking about investing in gold, it is a sound option, and we will explain why. Consumer prices have increased by 9.1% year upon year, but data shows producers are now paying 11.3% more than they did a year ago. Many investors are using assets like gold as an edge against rising prices and market volatility as inflation soars. For newcomers, learning how to invest in gold may seem outdated, complex, or time-consuming. But with a correct investment plan, an investment in gold could provide you the advantage or edge you need. Today, in this video, we will guide you thoroughly through the way, so hang tight till the end. Don't forget to subscribe to our channel to stay up to date with all news in the personal finance world. Let's begin. The price of gold concluded the first half of 2022 at about $1,817 per ounce, despite strong inflation and market turbulence. As the Russia-Ukraine war intensified, investors fled to secure environments, so valuation for the metal initially rose. However, as the US dollar has gotten stronger due to speculations on rate hikes and positive US employment data, gold has recently experienced mixed price movements, falling and rising in waves. The most recent inflation statistics have also driven gold marginally lower. Accordingly, as of this week, gold prices are at an 11-month low. However, in an incredibly challenging global market, gold is still holding steady at over $1,700 per ounce. And as long as inflation persists, many investors will continue to be interested in this precious metal. Why is gold the best choice? Trade has been fueled by gold coins and jewelry for thousands of years. As paper money evolved, notes frequently match a specific amount of gold. Even though this is no longer the case in many nations, including the United States, gold remains valuable due to its historical significance. Due to its long-term worth, gold is a wise choice for investors looking to diversify their portfolios. Many investors choose gold as an edge against downturns since its prices typically fluctuate in the opposite direction of stocks and bonds. Government stimulus programs frequently help the price of gold, as was the case with the COVID-19 pandemic. Purchasing gold and the gritty details. There are two ways to invest in gold, directly and indirectly. Direct investments entail purchasing and keeping physical gold in the form of coins or bullion. Investing indirectly typically entails purchasing gold-related securities or funds that purchase gold on your behalf. The purer the gold, the greater the carat. Higher carat gold is less robust and more vulnerable to dents and scratches. If you choose to invest in physical gold, you must first locate a dependable vendor. Once you've resolved that, you'll need to locate a secure location to keep your gold. Last but not least, you'll need to purchase insurance to guard against theft or loss of your investment. How to start investing in gold. Gold is purchased by both retail and institutional investors for speculative and hedging uses. However, the popularity of precious metals-based funds means that you may now invest in securities that buy gold on your behalf, saving you the hassle of having to store the metal yourself. Let's look at several ways to invest in gold yourself, now that you know what these investments entail. Jewelry. The majority of gold purchases are made of gold jewelry, which produces about 50% of the world's gold. In general, 14-karat or higher jewelry is regarded as an investment. Be sure to save your receipt and any related papers to facilitate appraisal and selling in the future. Although purchasing jewelry is generally straightforward, you can have trouble later selling rings and necklaces for a profit. To cover labor costs and retail profits, you will additionally pay a markup on the worth of the metal. Gold coins. Any pure gold, including gold bars, is referred to as gold bullion. These objects must be confirmed for weight and purity despite their various sizes. For added security, many also have serial numbers stamped on them. Monetary gold. Gold coins normally have a lower gold content than gold bullion, but they could be easier to exchange. When coin prices climb, you can frequently buy them from dealers, individual collectors, and coin stores, and sell them for a profit. Some coins, such as the American Buffalo and Canadian Maple Leaf coins, have even higher markups due to their collector status. These additional expenses have the potential to raise prices above the actual value. ETFs and mutual funds for gold. Gold mutual funds and exchange-traded funds are accounts that purchase gold on behalf of investors and trade similarly to equities. Gold-based funds make investing in gold simple since you can profit from changes in gold's price without being concerned about the expenses associated with actual ownership. Nevertheless, there are costs associated with trading mutual funds and ETFs. Additionally, a lot of gold-based ETFs also deal in other commodities. While this automatically diversifies your investments, it might prevent you from making only investments in gold-related assets. Futures and options on gold. A futures contract is an agreement to buy and sell a commodity, such as gold, at a specific future date. Each contract denotes a particular amount of gold, and it has two possible payout options: actual bullion or the applicable currency. Another derivative-based investment option is options on gold futures. Options give the option to purchase gold futures contracts at a specified price and time, but not the obligation to do so. Options can be used to increase the return on your investments, but in most cases, you must pay the full underlying value to purchase an option. Also, gold futures and options have potentially high costs and higher volatility, and they both call for a deeper knowledge of the financial markets. They are therefore typically best suited for experienced investors who can bear the associated financial risk. Gold mining businesses. Combining physical assets with conventional stocks is another approach for beginners to invest in gold. You can benefit from gold without keeping the physical commodity by investing in shares of firms that deal with it. Some of the hazards associated with purchasing gold, such as the potential for flat prices, can be reduced through mining ventures. To increase your long-term gains, they might also provide big dividends. Why should you buy gold? Gold frequently attracts investors due to its potential for diversification and hedging. In addition, while being a physical asset, it is typically simple to convert into cash, making it a more tangible investment than certain other physical ones like real estate. Even while gold doesn't always outperform other investments, it has a history of producing strong long-term returns. So is gold a smart financial move? You might have to wait a long time if your goal is to get rich investing in gold. However, gold can be a good investment if you're looking for a non-correlated asset to protect against inflation and market volatility. However, gold is not a guaranteed thing and can be volatile like all other assets. Remember that unusual pricing factors like weather, natural disasters, and mine collapses may affect commodities like gold. What quantity of gold is a wise investment? Your risk tolerance, goals, and portfolio composition will determine how much gold is appropriate for you. You don't want to risk a large portion of your wealth on the asset because gold is frequently used by investors for hedging and diversification. The objective should be to reduce risk while maintaining a return on your investment. When is the right time to buy gold? While some assets, like real estate, can be purchased all at once, it is typically a good idea to purchase stocks, bonds, and gold in smaller quantities. Consider it to be precious metals equivalent of dollar cost averaging. The objective is to gradually expand your stores so that you can withstand price fluctuations. So, are you still afraid of gold investment or planning to invest? Share your thoughts with us in the comment section below. Subscribe to our channel, share this video with others, and smash the notification bell to stay up to date with all our content. Thanks for watching. See you in the next video.